Well, hello. Welcome to Wednesday Wisdom. And I want to say thank you and appreciate you for tuning in with me again today. And we want to talk about an update on 2023 health insurance for S corporation owners. I know a lot of my business owners are having an S corporation at least for at least one of their entities, like an operating entity or the entity that actually generates income. And health insurance has been one of those things that we always have on the tax returns, at least, in planning and all of that. So there's some updates that we want to make sure that we pay attention to. So today, what we want to discuss is a little bit of the ins and outs of what do you need to do with your S corporation to make sure that your health insurance deductions are being, categorized correctly, and you avoid a $100 a day penalty for violating the rules of the Affordable Care Act. The Affordable Care Act has, quite a few different pieces in it, and we'll go in and talk about how can you go ahead and, avoid this hefty penalty for all the owners of an S corp. So one of the good news that you want to remember is that the old rules will still apply. So anything that we had in the past still applies. That means, step one, which is the cost of the health insurance on the S corporation. It goes on the books, and it can go on the books in two ways. It can either go direct payment. The S corp makes the premium payment directly to the insurance company for accident and health insurance policy that covers the owner employee who has more than 2% ownership, and that includes spouse and dependents. Or number two, it can be a reimbursement, right? If you're an owner employee that has more than 2%, you can have the premium payments to the insurance company, and you just provide the S corp proof of the premium payment on the S corporation, which in turn gives you a premium or a reimbursement of the premium payment. So direct payment or reimbursement. So number one, the step one on the health insurance is the cost of the health insurance is on the S corp books. That stays the same. Nothing changes there. Step two, the S corp includes the health insurance premiums on the owner employee's W-2 form. What does that mean? That means that the income is not subject to payroll taxes. In other words, the S corp would include the additional compensation on the W-2 in bucks, the taxable income, but not for Social Security and Medicare. So I know that once it gets confusing, right? And step three is that you, as an owner, right, with more than 2% in your S corp, you claim the health insurance deductions as self-employed health insurance on your 1040, on your individual tax return. So this will stay the same. Okay. Now, what do we want to talk about in a little bit more detail, right? So to claim the self-employed health insurance deduction on your personal tax return, what you need to do is a couple of rules they need to remember. You and your spouse, if you have one, if you're married, filing joint, you must not have access to employer-subsidized health insurance, right? So you cannot take that self-employed insurance deduction if you are eligible for employer-subsidized health insurance, right? So what happens is if you and your spouse can actually get the family health insurance as a tax advantage fringe benefit through your employment, right, through your company, you lose your eligibility for this deduction. Even if the spouse does not actually accept the employer sponsored insurance, that poses an issue for us as in the planning side. And number two is that you must not have adequate or compensation salary from the S corp. So the deduction of the insurance premium cannot exceed more than the salary. So let's say if your insurance is $30,000 a year, you cannot have less than $30,000, right, as wages. So if the S corp is going to put the health insurance on your W-2, that already resolves this problem. So this problem is going to be really minimized by doing that on the W-2. Now, a couple of things that we want to say. There's something that is called rank and file employees. As a small employer, your S corporation does not have to provide health insurance benefits to its employees, right? The small employer actually it means, an employer, a small business with less than 50 full-time employees or full-time equivalents of employees. So if you do if you decide to offer medical benefits to your employees who are not S corporation owners, you are facing right now a $100 a day penalty for doing this wrong. So the big no-no is reimbursing employees for individually purchased health insurance. You have to remember, if you want to do that, there's a couple of ways you can do it, right? So if you want to reimburse them, you have to have an actual plan in place. You can't just take the money and just reimburse people just because they're your employees, right? So you can do a Kashera plan, which is a qualified small employer health reimbursement arrangement, or an individual coverage HRA, right? Both of them we can discuss on a couple of pieces on this. But one of the things that I want you to note on this is that the S corporation can reimburse the more than 2% owners for individually purchased insurance and face no penalties. Okay, but should the S corporation reimburse this rank and file employees, the employees that you have in the business that are not owners, for individually purchased insurances without a Kashera plan or individual HRA plan, you can actually have a penalty of $100 a day for each employee. That means, this is really the kicker, that means you can actually have a penalty of more than $36,500 per employee in one calendar year in 2023. So that's a really big update for every employer that is doing reimbursements to employees, right? So if you want to provide the health benefits to employees through the S corporation, there are many tax advantage ways to do so, right? So the S corporation treats the benefits for non-owner employees just as any other business would. So one of the ways you can do it is to have a group plan, group insurance, right? So suppose your S corporation provides group insurance to all the employees, including you, which is you are a more than 2% shareholder employee, right? So what happens is the S corporation must treat you differently than the way it treats non-owner employees. And here's how it works. The non-owner employees, all the deductions, all the contributions to their insurance plan, and the non-owner employees receive the health benefits tax-free. Their W-2s will actually have that as tax-free benefit. The people, the shareholder who own more than 2% in the S corp, right? They have to follow this 3-step deduction, process we discussed above, right? The S corporation, purchases the insurance for the group and then treats the group insurance benefits as W-2 compensation to you. So if, let's say, you add your family and it costs you $30,000 to get insurance for you as an shareholder owner, that $30,000, the cost of the health insurance that the company pays for you, gets to be added back on your W-2. Okay, and when you go back on the personal tax return, you get to deduct the self-employed health insurance deduction. So I hope that makes sense on that. And many people will say, well, what about the discrimination rules? So right now, the IRS does not discriminate, does not enforce any discrimination provisions of the Affordable Care Act. That means you and your S corporation can legally discriminate without treating, without looking at the Affordable Care Act penalties. For example, you can have your S corporation buy health insurance for you and nothing for the other employees, or you can have the S corporation reimburse you for your individual insurance plan and have a separate group plan for the other employees, the rank and file employees. So that's a great benefit, because sometimes you want to get a cheaper plan, or not necessarily a cheaper plan, a more cost-effective plan for all the employees, right? And that's going to be a group insurance, and you don't want to be part of that, but you want to have a separate plan, or you want to have an HSA plan that you don't want to offer to your employees, and you want to have a separate plan. You can do that right now as the non-discrimination provision of the Affordable Care Act, which is really great. Now, one of the last piece that I want to tackle into this, and I want to keep it short, is the premium tax credit in your deduction. So if you purchase your individual insurance through a government health insurance marketplace, right? Every state has, like California has the marketplace. Other places have different types of names for each state. But you buy it the marketplace, right? You can combine the individual premium tax credit, right, which is the government subsidy for your health insurance, with your self-employed health insurance deductions. When you calculate that deduction, you just want to make sure that you consider that tax credit to make sure you don't double dip on it. right? So are changes coming in the next few years, or at least in 2023? Yes. So the government agencies you see, including the IRS, are slowly providing us additional rules for implementing the Affordable Care Act, which is going to take effect in the next few years. So we don't really have a full final picture of how these rules will work, but the IRS has promised some guidance and new rules in a couple of the topics that are really important to us on the health insurance side. So what we expect to see in the coming months is rules about discrimination under the Affordable Care Act, which is number one. And number two is the S corporation owner health insurance deduction. That's something that the IRS has promised to provide guidance on. So we're waiting for that. So what is the takeaway for you today? Like the good news is that, what was there before stays in 2023. Okay, you and your spouse can be, and children under 27 can be covered by health insurance under your plan. But remember that if for you to be able to qualify for the self-employed health insurance deduction, you must go through the IRS required step. Make sure that this is easy. Just keep in mind, it's only 3 steps. Number one, make sure the S corporation pays for the insurance premium, either directly or indirectly, as a reimbursement. Number two, that the S corp include the health insurance as wages on your W-2. And number three, deduct the cost of the premiums using the self-employed health insurance deduction on your Form 1040. Okay, so I hope this is useful. This is a great update. You want to make sure that you're not facing the $100 per day penalty for 2023. So make sure you stay up to date. If your accountant did not tell you about these rules, make sure you inquire about it. If you need help or you have questions, you can reach out to us at meetmycpapro.com, and we'll be more than happy to have a conversation with you. And thank you again for watching. See you again for next Wednesday Wisdom.